Everyone. How are we doing today? What is this? The Daily Millionaire News. And if you don't know, we started this series well over 100 days ago, thanks to an interview that Gary Vee had with a artist named Nipsey Hussle. Nipsey, unfortunately, has was tragically murdered. Actually, I think about 3 or 4 months ago. That interview really sparked the idea for, hey, you know what? Try to do something every day and talk to your audience. Share with you what's going on. So again, thanks Gary V for the inspiration. So real quick, today's entire discussion is going to be about Warren Buffett's annual letter. If you don't know, good morning. If you don't know, Warren Buffett has been releasing an annual letter to his shareholders for almost 50 years. I think at just over 50 years. There have been books, there are MBA classes taught about his annual letters. This year's version, I just finished it, read it once fully, and then went back through it. I think it's 13 pages, if I remember correctly, of text. I think there's a couple of pages of kind of like, the outline and all of that. But um, I read it every year, at least I have for the last couple of decades. And this is what I took from it. First and foremost, I don't know why I didn't know this. Maybe it's just because I didn't want to. Warren Buffett's 89. I would have, I guess I would have guessed he was in his early 70s. I just never, I'm sure I knew that, but he's 89. Wow. Warren Buffett's 89. Couple of things. First off, I think the first thing to really note is probably going to be what most people are talking about is uh, I think I've captured the quote correctly. I have to read it to you. It's stocks are the place to be for the long haul if, right, big if, interest rates and corporate taxes stay at the current level. That's a quote from his annual letter where basically he is saying that, stocks are a great place to be, especially in a extremely low interest rate environment and a corporate tax structure that is as it sits. He talked about the American tailwind. He talked about making sure as an individual you do not borrow money, right? Go on margin to buy stocks. And then most importantly, also control your emotions. These are things that I find hard to do, frankly, especially in stocks, and it's probably why I don't trade stocks anymore. That last one, control your emotions, not good for me. Whenever I owned stocks, I found that I was looking at them too frequently, and any any reason I could hit the sell button or the buy button, and it wasn't good for me. The last thing he kind of talked about in that section is, while he is generally positive about the American economy and also the stock market, he was very clear to say there will occasionally be major market drops of 50% or greater. So lots to take in there. Again, he's very pro stocks. Again, the American tailwind is so right, and again, don't use borrowed money to buy stocks and control your emotions. So pretty just down to earth talk as he always puts out there. The one thing that I took away from that first quote, again, stocks are the place to be for the long haul if interest rates and corporate taxes stay at the current level. This is something we may all be forced to take into account at the end of the year, right? There is current momentum, at least around one significant challenger, that could significantly change corporate taxes and significantly perhaps influence interest rates. So listen to Warren Buffett, right? We've got to be paying attention as we see all this shakeup in the Democratic primary to see what's going to happen. Because again, stocks are the place to be if interest rates and corporate taxes stay at their current level. And there's at least one socialist out there coming after corporate taxes. So let's be careful. Next up, I found this interesting, just little tidbits in the letter I kind of noted down. Looks like Berkshire, again, Warren's company, wrote off $65 billion in depreciation over the last decade. 65 billion in depreciation, right? That was from property, investments in equipment, and other things. It should be noted that that 65 billion in depreciation came off a investment of 121 billion dollars. So it's interesting to see that he's investing in his own companies and taking into account depreciation, which is something that is big for real estate investors and something I frankly look forward to taking every year. I like depreciation. It is a wonderful um, vehicle that the IRS gives real estate investors to depreciate their buildings and their assets. So very, very cool. Uh, Interesting to note that I have known Warren Buffett to own financial institutions for a long time. It's always interesting to look at the list. He highlighted the top 10, the ones kind of in that realm were American Express, Bank of America, Bank of New York Mellon, J.P. Morgan, U.S. Bank Corp, and Wells Fargo. All kind of expected names for me. Then there was an oddball, Delta Airlines. I had no idea. He owns, I think it was 11% of Delta Airlines. Kind of seems different. The other one that was in there was Apple. Um, and he is, he's been very clear on Apple. So he is going to, he's talked about owning it's kind of the big tech company he's owned for a while. He got out of IBM and into Apple. So again, um, I got to look up when he bought Delta Airlines. That just seems, I don't know. I guess that just feels like an odd investment to me for Berkshire. But again, what do I know? The other one, you got to love his homespun charm. He talked a lot about buying companies, and he related buying companies to marriage. Basically, kind of the takeaway I took from it is, all acquisitions start out great, right? Most marriages start out great, the honeymoon and all of that. But sometimes there is disappointment rather quickly, and this is interesting. Um, Mike, you can actually leave a comment in the videos that once they post. That way I can see them at the end of the day. If you want to leave subscriber questions, like Mike just sent a little thought bubble, leave it in one of the videos so I can see the comments for days to come. These little thought bubbles I don't see after this video is published. So back to Warren Buffett. Buying companies is like marriage. Um, he talked about some being disappointed right away. But then the other thing he said is when there is disappointment, it's usually the person that's buying, or in the marriage case, the one proposing. He used the term dreamy eyed. You just love the terms that Warren uses on occasion. So, again, usually it's the buyer or the one proposing who overpaid or missed something in their research. So I thought that was interesting. Uh, at being 89, it's probably with no shock. And Charlie Munger's older, his partner in crime. He's got to be in his 90s then. Wow, that's just shocking. Um, he did go on to say that the company is 100% ready for their departure. Doesn't sound like he's leaving anytime soon, other than when he's taken. So he did go on to talk about what's going to happen to all his stock. Right, 99% of his net worth is tied up in the stocks. He hasn't really sold anything. So what's going to happen is essentially over the 12 to 15 years after he's passed, his shares will be on the street because he's already structured a plan to give it away to various foundations over the next 12 to 15 years post his passing. So that's interesting. He did take on stock repurchasing. He often takes on themes that are commonplace for most companies when he thinks they are advantageous to corporate executives and not stockholders. And he's very clear that most stock repurchases are good for the CEOs and executives and not good for the shareholders. He said that when Berkshire looks to repurchase its stock, which it has on occasion, he wants it to be cheap and he wants to have ample cash after it's over. And he went on to give an example. If he thought Berkshire was worth $1 and he could get it for 95 cents, that is not cheap enough, right? The intrinsic value of doing your calculations at 95 cents is not clean math, and has some objective distortions. So he wants it to be really, really cheap, was his point on that. And while he didn't call anybody out explicitly, it was very clear that he is disappointed in how many companies are manipulating stock prices via repurchases. And then lastly, I thought this was really, really interesting. It looks like Berkshire sent off an additional 3.6 billion to the Treasury for its corporate taxes, on top of the 243 billion his companies had already paid. So he is pretty proud of the fact that his one company paid 1.5% of total corporate tax receipts in 2019. I think that is amazing, right? One company did that. So I'm not sure what that says. Maybe not enough big companies are paying taxes. That could be. But to think that you spent almost $250 billion on taxes, that is pretty crazy. So again, this entire show was dedicated to Warren Buffett's annual letter. I am shocked that he's 89 years old. Stocks are the place to be if interest rates and taxes stay where they are, corporate taxes. The American tailwind is real. Don't use borrowed money, and watch your emotions. So at the end of the day, that's what I got for you. Have a wonderful day, and we will talk to you tomorrow.